This podcast is sponsored by Tusk, a continuity of business solution for industries that struggle with traditional banking. Check them out on the web at tusk.network. The Rob McNealy program is the nexus of cryptocurrency, blockchain technology, and entrepreneurship. Now, welcome to the program. Okay. Today, we're talking to Bobby Ong. He is the co-founder of CoinGecko, which is one of the major crypto asset exchanges on the planet right now. He's been tracking cryptocurrencies and blockchains with CoinGecko since 2014. Bobby is an author. He's contributed to 2 books, including digital currency books, the Handbook of Digital Currency and the Handbook of Blockchain. And he was also included in the Forbes 2019 30 Under 30 Asia list. And he graduated with a Bachelor of Science in Economics from the University College London in 2012. Bobby, how are you today?
Very good. How about you?
Wonderful. I know you are a busy guy, and I really do appreciate you taking the time to come on and talk to me today. I think there's been a lot of stuff heating up in kind of the crypto world out there, especially with the exchanges and the exchange trackers. And I've been really excited to talk to you. We've emailed back and forth now for about a year. So just talking about my own projects and stuff. So I do appreciate you coming on today.
Pleasure. It's a great honor to come on the show and to speak about the things that we've been doing at CoinGecko.
So just a little bit of background about yourself. What got you into CoinGecko and launching this project back in 2014?
Yeah, so I first heard about Bitcoin in 2013. So this was about half a year after I graduated from with a degree in economics from University College London. And I think what really sparked my interest was I was trying to code, trying to learn how to code, and I was hanging out a lot of time in tech forums online trying to learn how to improve my programming skills. And a lot of these programmers were talking about this new form of money called Bitcoin, and it got me really curious because like I just spent 3 years of my life in London learning about money, but my lecturers did not mention about this new form of money called Bitcoin at all. So something just doesn't add up. It's either these programmers are crazy or my lecturers are obsolete in the sense that they did not know this new form of money coming forth. So I thought that the only way to really know about the future is to read the white paper and give it a shot by buying my first Bitcoin and moving around. And once I bought my first Bitcoin, I thought and I start moving it around to my own wallet that I control, this was revolutionary because it kind of completely changed the way money operates as I understood it. And I got really deep into it, and I started discovering there are other coins out there in the market. Back then it was Litecoin, Peercoin, a few other coins. And then what really got my interest was reading the early white papers of BitShares, which was an explanation of the decentralized autonomous organization, and they talk about smart contract platforms. Basically everything that we are seeing in Ethereum these days was explained in a white paper by the BitShares guys back in 2014. So
Dan Larimer.
Dan Larimer, that's right. So, I mean, the project did not do too well, but Ethereum is a manifestation of everything. And then we had the DAO project at one point, which did not turn out well on Ethereum, but I was trading all these altcoins and just for profit. And I think what got me really interested to start CoinGecko was that I was spending a lot of time doing research online, trying to find which coin had the most active developer and social community. And I realized that there is no site out there in the market that put together all this information in an easy to navigate and user-friendly manner. So together with my co-founder, TM Lee, he's got a computer science degree from Purdue. We decided that we want to play a role in the global crypto space back in 2014, and decided that, starting a data aggregator was probably something that we are well suited to, and that's how we started CoinGecko. So we started by tracking about 50 coins and then adding like developer stats, social media stats, and over time it just grew. So yeah, that's kind of story of how CoinGecko started.
So for a lot of folks that may not know who CoinGecko is, 1, get out of your hole, but 2, CoinGecko is a competitor to CoinMarketCap. And I would say you're probably one of the biggest competitors to CoinMarketCap out there.
Yep. You're the second largest in the world. So it's them and then there's us. Yep.
Well, one of the things that I like about what you guys have been doing with CoinGecko is that you guys will track any, at least, from, how I got a hold of you is when we launched our original token project a year and a half, almost 2 years ago. CoinMarketCap wouldn't give us the time of day. And we had a legitimate, project. We didn't do an ICO. We're not scammers. And we put our project out there on our token, and we applied, I think, 9 times to CoinMarketCap over the last, almost 2 years. And they would never list our token ever, and you guys were like, yeah, we'll list it. And I've looked around, and there's a couple other trackers that aren't as big as you or as full featured as you guys are, but you guys would be willing to take a chance and track us. So why would you do that? And why do you think CoinMarketCap doesn't?
Oh, I can't speak about CoinMarketCap. I don't know what their procedures are. But I can speak about CoinGecko and what we do. So we are community focused, and whenever there's a new token or new project coming up, we do our best to track, because although the project may be small, there's always interesting ideas coming out, and there are some people who's interested in the project. As long as it's traded on some exchanges, we want to track them. And likely or not, small project will become big project at some point. Or maybe die off, it doesn't matter. But as long as there's some community behind it, there is some data and there's information that's worth tracking. So we believe that in being fair to all projects, and that's why we track you guys.
Well, and I can tell you, for me and a lot of other smaller projects out there, thank you. It's interesting, at least from, I'm an American, I'm based in the States, and, a lot of projects and a lot of groups out there will not take a project seriously if they're not listed on CoinMarketCap, and I know you can't give your opinions about them, but right now it's like they're becoming this gatekeeper now. And this is why I really try to promote you as best I can, because you guys seem to be at least a little more honest about, looking at the whole market and not just certain segments of it. But CoinMarketCap's becoming this kind of like, winner, and they get to pick the winners and the losers now, just by sheer allowing them onto their platform and where they're allowing them on their platform. And recently they made some changes. Their top 200 indices, new algorithm that has gone and changed the way a lot of projects that have been out there are listed. Even so, they're not really listing it by market cap anymore. They're saying that you're not allowed to be in the top 200 unless you're on certain exchanges that are connected to CoinMarketCap now. And I think that sets up a serious moral hazard. And they say it's under the guise of trying to stop fake volume, which is what I really wanted to talk to you about today. And to me, it seems like they're setting themselves up to be in a position that might be, tempting to be corrupt in some ways. You, on the other hand, you guys are taking a different approach to trying to kind of stop bad data, to stop the corrupt and fake volume that's out there. Can you tell us a little bit how CoinGecko deals with all these exchanges that are out there that seem to be manipulating, markets?
Sure. So I think in the past year and a half, since like January 2018 to like middle of this year, we've seen an explosion of new exchanges coming on board. So we used to track about 48 exchanges by the end of 2017, and throughout a year and a half, for the past year and a half, we added 318 exchanges. So that's a 700% increase in new exchanges tracked on CoinGecko. Unfortunately, some of these exchanges especially agent-based exchanges, are quite unscrupulous in the way they go around manipulating their trading volume, and this has pretty much contributed to a fake volume scenario, where it's come to a stage where reported trading volume by exchanges can no longer be used as a good indicator of how liquid an exchange is. So what we have decided is that we now need alternative metrics to sort of determine which exchange has the real liquidity in the market. And what we have done is in May earlier this year, we've introduced this thing called Trust Score, where we actually look at more metrics beyond just trading volume from exchanges. So we look at things such as the order book bid and ask spread, and we look at order book depth, and we also look at exchanges web traffic estimates. So if you think about it, an exchange that has supposedly claims to have large trading volume should have more users and therefore more web traffic to the website, and therefore using sites like SimilarWeb, you should track that websites like Binance should have more page views per month compared to a smaller exchange. So if an exchange is reporting a very high trading volume, but it has very little web traffic, all else being equal, like something just doesn't add up. So it probably means that these guys are either faking their API or doing some sort of wash trading or have some sort of transaction fee mining activity going around. Actually, at this point in time, if you take a look at Binance reported trading volume, we all know that Binance is the most liquid exchange in the market, but I think Binance at this point in time is probably, by reported trading volume, is hovering anywhere between number 10 to number 14 in the world, usually around $1 billion a day. You have exchanges like BitMEX doing $12 billion of reported trading volume. And the reason is simple. They are doing trans fee mining for the stablecoin pairs, PAX USDT specifically, and this results in an inflated trading volume so that they can go around claiming that they're the biggest exchange in the world by trading volume. You also expect that an exchange that is more liquid will usually have a tighter bid and ask spread because there are more traders there, and you also expect them to have a larger order book depth. So what we do is we take a last done price and we take a 2% lower bound and 2% upper bound and basically count the depth in the order book for to move the order book by 2%. So imagine if there's an order, if you sell like $1 million worth of Bitcoin, like how much of an order book would it move? So if it moves like 10% of the order book, that means that exchange is not liquid at all. Whereas if it moves only 0.5%, it's fairly liquid because you can sell or buy $1 million without moving the order book much. So this is what we did, and this is basically the first iteration of Trust Score. Sometime in September this month, we will be introducing an update to Trust Score, and we'll be introducing more metrics. Basically things like proof of reserves. You want to see like how many Bitcoin and Ethereum estimates that the exchange probably holds in their wallet. So if you expect that exchange has a large trading volume, it should probably also have a large balance of Bitcoin and Ether. And we look at the API quality. We also look at some of their KYC ratings, KYC risk rating, sort of get an idea of how good an exchange is. So basically from our point of view, reported trading volume is hugely inflated, no longer a good indicator. And we are out there trying to add more metrics and insights into tracking exchanges transparency.
So, you know, that kind of goes to two different levels, right? So you got the ethics of the exchange itself, right? Is the exchange trying to pump up and make itself look bigger than it is? But on top of that, it's what about the projects that they're listing that they're inflating the volume for? And to me, you know, I mean, I've been involved in a project for almost 2 years, but you know, I'm an investor too. I have a lot of crypto and a lot of cryptos, you know, in my portfolio that are not mine. And I think it's interesting that how do I know as a user what's a good token or, you know, coin to go and look and invest in when we can't even get good data about it? Because, you know, maybe it's not the coin itself that's kind of doing the fake volume, but maybe it's the exchange just using that coin to do fake volumes. Like for instance, and to me, this doesn't make a lot of sense, but I see sometimes where there's a project that their trade volume exceeds their market cap on a daily basis. And to me, that just seems odd to me, that there's that much trading on this one particular coin when there's nothing in the news or what have you about that project. But I mean, what do you think about that? How do we kind of solve, you know, the information that investors need to make good decisions with crypto assets?
I think it's a tough question to answer. Fake volume happens on many different ways, many different fronts. Like it could be initiated by the exchange on various methods. Like exchange could be just it could be just outright faking the API volume. They could be doing some sort of trans fee mining to inflate their volume. They could do some sort of trading incentive with zero fee trading, for example. And then and the coin teams itself, they could also be the ones that are inflating the volume. So they could be doing it themselves, or they hire market makers who are doing wash trading or manipulating the volumes. There are many reasons why people would do that. Like, I guess people kind of want to have inflate their volume because it kind of creates a certain sense that there is a lot of trading and liquidity going on for a particular coin. But if you actually try to, for those that are inflating their volume, if you actually try to liquidate your position in these coins that are faking their volume, it's actually pretty hard, because then when you try to make a big sell or big buy order, like, all the liquidity disappears suddenly, because the market makers will not want to take a loss, right? So it's tough. I mean, I would argue that you might want to take a look, if you want to, if from an investor's point of view, if you are looking to evaluate a project, like, looking purely at trading volume as an indicator is probably not a good idea. It is just one of the many metrics that you should look to consider a project. I'm guessing, like, it should be a 360-degree evaluation of a project. If you're interested in buying in, it should be things like evaluating the project's purpose. Like the basic question, does this project need a blockchain at all? Is there a reason to use blockchain for this project? And the token, I guess the token utility plays an important role. And then looking at the team, is the team reputable? And looking at the product, the roadmap for the project, and looking at the things that the team has done in the previous months. So they may have promised a certain thing in their roadmap 6 months ago. What have they done in the past 6 months? Checking like things like, and this is what we track pretty well on CoinGecko as well, checking the developer stats. Like, are there any development activity surrounding a token, a coin, for example? Are the developers actively making commits to the project or to the protocol? Are there any social media following for the project? Is their Facebook, Twitter, Reddit community growing, or is it just stagnating? Or the Telegram user groups, is it growing or just stagnating? If there are no significant changes from 6 months ago and it sort of stays stagnant, then it's probably a bad indicator. But then again, like, if you see sudden spikes in like any of these numbers, it also probably means that these exchanges are probably faking some of these metrics to appear that they have very active development or very active community. So these are things that you need to take a look at.
I think that's great advice. So before we wrap up here, what would you do then to find out that information? Someone's new to crypto, they're trying to find a good exchange to trade on, and they're looking to get good information. Where would you say they should start?
I think if you are new to crypto, you should stick to the basics, which is like, I mean, you should probably hold like just Bitcoin and probably not do as much trading. The general strategy is to just buy Bitcoin and hold for the long term, and that generally pays off well. And to be more specific, to dollar cost average your entry into Bitcoin, meaning to buy, like, for example, $100 worth of Bitcoin every month for a period of like 1 or 2 years, for example. So over a period of 2 years, accumulate a portion of your portfolio in Bitcoin. I mean, everything in crypto is sort of correlated with Bitcoin. Not so much in the current this year, but like during the previous bull run, like when Bitcoin goes up, altcoin goes up as well, usually at a more volatile pace. And when Bitcoin goes down, alts go down as well. And we have seen this in this run that has started since Q2 this year, that pretty much Bitcoin has gone up and alts has not kept up, and it's pretty much altcoins have gone down in price relative to Bitcoin. So the strategy, if you're new, is to just buy Bitcoin and hold, is generally good. I mean, we have seen the dominance went from, Bitcoin dominance was around 90%. It went down to around 45%. It's now back up to around 70% or so. That's generally a good strategy. And if you are interested in altcoins, I guess the only way to really know is to study and learn and keep up with the news surrounding the crypto community. There's like 5,000 other coins out there in the market. Most of them will not survive, but there will be a few that will survive. Ethereum is one strong candidate. I guess if you really want to buy, I mean, into alts, like, I mean, a small percentage of your crypto portfolio can be used to speculate on alts, I would say. But the key is to just learn and study and not to overly risk yourself, overstretch yourself, your portfolio.
I think that's solid advice. Bobby, where can people find out more about you and CoinGecko?
Yeah, just visit www.coingecko.com. Every quarter, we publish a quarterly report on the crypto ecosystem. So if you're interested to stay up to date, you can take a look at our report. The latest report is the CoinGecko's Q2 report, where you can get information about things such as the IEO ecosystem and more.
Thank you so much, Bobby. It was nice talking to you today.
Nice talking to you.
Thank you for listening to the Rob McNealy program. Make sure you check us out on the web at robmcnealy.com and subscribe to our podcast at YouTube, iTunes, and on the Google Play Store.